Here in Module 4.4, we're going to break down EBIT. And this lesson has two learning objectives. The first one is what is EBIT? And then we're going to do a case study of Nike's EBIT. Okay guys, let's jump right into it. What is EBIT? Well, first of all, EBIT is an abbreviation for earnings before interest and tax. And while that sounds like a definition in itself, let's look at a practical example of how to calculate it. Here we're looking at the income statement from Nike on TIP Money. Let's take a look at the most recent numbers. In the financial year of 2016, Nike had revenue of $33.51 billion, which is what you see here. Revenue is basically just the number of units they sold times the sales price. So if Nike sold 10 pairs of shoes for, call it $100 each, the revenue would be $1,000. Clearly, Nike's breakdown of revenue is much more comprehensive, but that is generally all there is to that account. Just below, you'll see an account called cost of revenue. Right now for Nike, it's $18.3 billion. The easiest way to think about the cost of revenue is as the variable cost that goes into production, for instance, for a pair of shoes. As you can see, since Nike in aggregate has used $18.3 billion in materials, it leaves $15.21 billion in gross profit. You can look at gross profit as the amount of money Nike would have made purely from product sales. In the situation of Nike, you can see that just a little over half of the revenue is used for variable costs. The ratio between variable cost and revenue will vary greatly dependent on the industry. For instance, a technology company like Microsoft doesn't have as many variable costs as Nike, simply because the cost structure for them and their competitors are just different. So, just comparing the gross profit ratio across industries won't typically do you any good, but clearly the lower variable cost for comparable companies, the better. Now, all companies, including Nike, have to pay operating expenses, which are fixed costs independent of production. So for Nike, that will include expenses for marketing campaigns, depreciation on buildings, equipment, and just generally all the expenses of running headquarters and divisions like rent and salary to staff and the management. It's all costs required to maintain the business. After subtracting the fixed cost, we have found the so-called operating income of $4.63 billion. Now, the operating income is also known as EBIT. I know that this is a little confusing, but in accounting we use a lot of different terms for essentially the same thing. EBIT or operating income is, you guessed it, the income we derive from our operations. That means that income expenses from interest or taxes are not included. Even one-time write-offs like restructuring or everything related to business units that are not perceived as a part of the core business is left out. I'm sure you saw before the power of the gross profit. But again, since the cost structure across industries varies greatly, as we discussed with Nike and Microsoft, a metric that's a lot better to compare is EBIT. Let's take a step back and briefly relate this to the enterprise value in the TIP value multiple. I'm sure you can see what I mean when I early on this module said that is somewhat similar to the price to earnings. But as you can see in this module, it's a metric that's a lot more accurate and truly shows the cost of acquiring a business and provide a comparable metric for the actual profitability. So now you know what EBIT is and how to calculate it. Or just as good, to be able to identify the number in the income statement. I really wanted to show this to you in detail because I'm a firm believer in learning in detail how to calculate metrics before one can confidently use them in practice. So there you have it. In Module 4.3, we learned how to calculate and identify the enterprise value of Nike, which we found to be $85.74 billion. And here in Module 4.4, we learned how to identify EBIT, which was $4.63 billion for the company. When we do the numbers, we can see that we come up with a TIP value multiple of 18.5. So now that you know how to calculate and identify the TIP value multiple, let's start to use that knowledge in practice in Module 4.5.